Is this a buy the dip opportunity of a lifetime for XRP and crypto, or are we in for a deeper sell-off? Well, many people believe we are on the brink of a global recession, but is this true? Well, the major Japanese stock index, the Nikkei, is down nearly 21% as of right now, off its multi-year high, because the Bank of Japan raised their interest rates by a mere 25 basis points. But that caused the thing to tumble, and it also had contagion into the US markets. Now, this is because of something called the yen carry trade, which we're going to dive a little bit deeper into in this video. But how did Japanese markets exactly affect the US markets? And more importantly, how will the Federal Reserve and Jerome Powell respond that could stuff your pockets flush with cash on your crypto positions, just like in 2020 and 2021? And actually, what are the odds the Fed even responds over the next few weeks or months, creating a once-in-a-lifetime opportunity that is likely to make a lot of investors very rich, including yourself? So in this video, we'll uncover some of the new information surrounding the Japanese market carry trade and why some people believe Jerome Powell has to act and come to the rescue. We'll be covering this MVRV indicator that's flashing a very rare signal, and actually for the first time in history. What does it mean? We'll also cover one of the greatest Bitcoin charts in history and why no matter what, you should probably be using every buy the dip opportunity to your advantage, whether it's for Bitcoin, XRP, or just about any other altcoin. Finally, head on over to bullrunners.com and you can find the link in the description below to discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. Now, just as a quick heads up, this is an all market solution. So it does not matter if we are in a bear market or a bull market. At the end of the day, this is a great way to put your money to work for you, which is actually a great way to hedge against risk. So again, go to bullrunners.com, and if you are feeling blessed, comment 777, and if you're going to be the richest person in your family tree, smash the subscribe button. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Hello, friend, and welcome back to the video. So it has been a wild ride of the last 24 to 48 hours as the markets have been extremely volatile. Even from Barron's, they posted this headline that the stock market is rebounding after a steep sell-off, and this was earlier in the day, and so already, right, that rebound is getting sold off into, which is pretty much an indicator that if anything, all of the short positions were potentially leaving the market, right, or all of those long positions potentially got liquidated. The rebound occurred, and now there's still more pressure to the downside. So how much further are we really gonna go? I'm not too sure, but here's what I do know. Volatility as it is at an all-time high here. So I guess it would be disingenuous for me to say that it is actually at an all-time high, but it is at a local high that we didn't even see since the dumps in 2022, when the entire market was tanking about 35% from the S&P and upwards of 70 to 90% on your favorite cryptos and altcoins. So that said, you can see that yesterday alone we spiked up to about 65 percent or 65 points on the VIX, which is a volatility index. The last time we were in those ranges was actually in the COVID crash, which was considered one of the worst crashes in modern history. And then the same remains true back in the collapse of 2008. So either this is presenting an extremely good buy opportunity, especially if the money printer go burr from the Fed, or this is just the beginning of contagion in the markets. And if I were to pull up the S&P 500 overlapped with this period of time, we'll toss it on a 3-day time frame, that you can see right here that in a situation where we pump hard on the VIX, right? This is again just a volatility index that typically means markets are dumping. And in the case of 2020, we did for about a month of time right here as the VIX continued putting in higher highs. So it is very much possible that this market can continue dumping for a month or 2 months into the end of summer before we get some range of support or intervention from the Fed. And in that type of a scenario, crypto markets would continue tumbling. The same thing remains true back in 2008 when we saw the VIX hitting these ranges. Not only did it, and we'll even zoom in there a bit, not only did it hit new highs and then break back down for a minute, it continued to dump in terms of the actual market. You can see the market dumping here while the VIX put in higher highs. And then once it peaked, VIX and volatility started to decline when we put new lows in, which typically means there's less of a volatile response. Markets are just responding accordingly. People are capitulating, but the markets are becoming more dull, if you will. So the VIX was actually declining in this range here. In terms of 2020, we did respond very quickly. So you can see here that we bottomed out right around the time the VIX peaked, and then we were ready to go. But this is one of those situations in modern history where we did have a V-shaped recovery because of quantitative easing and lowered interest rates to near zero. And those are the two tools in the Fed's toolkit. So it's very much possible that they could apply it here if volatility in markets continued to collapse. But more contagion and a potential collapse in the markets could actually be a very good thing for your crypto portfolio in the long term. So here is what a gentleman from JP Morgan, who's the co-head of global FX strategy, had to say about the Bank of Japan and the carry trade and just how far into this whole ordeal we are.
Looking at the various suite of positioning metrics we have, we think that the carry trade unwind, at least within the speculative investing community, is maybe somewhere between 50 to 60% complete. So we are not done by any stretch. Most people would probably concur that yen is one of the most undervalued currencies anywhere within G10 or EM, which means that once you get snowballs on this scale, the odds of that continuing are larger than would be the case otherwise. And some of the technical studies we've done suggest that once you get very large, sharp moves in short periods of time, like we've had with the yen over the last week or so, the technical damage that it inflicts on portfolios is not easily undone. So you don't tend to get V-shaped reversals back to where the move started from. All you tend to get is, at least a good case outcome, is stabilization in markets around current levels, maybe a shallow recovery at best. But in many of these instances, you tend to get continuation of the moves, if at a lower velocity than what you've had before. So we generally are of a defensive mindset. We've been of this mindset for a while, and we still have in our outstanding recommendations some small allocation to long yen trades.
Now, just as a quick refresher, what is the yen carry trade? This trade involves when an investor borrowing in the currency of a place where interest rates are low, like Japan or China, and then using it to invest in a currency where interest rates are higher, like in Mexico, or in this case, even the US. But just how big is this carry trade, and is there actual contagion into other markets? Well, another proxy, and this is an article from the Wall Street Journal, is to look at the Japanese bank's foreign lending, which reached over $1 trillion as of March, which is, no small sum. That was a 21% rise from 2021, according to data from the Bank of International Settlements. In other words, everyone got kind of cozy with low interest rates over in Japan and continued to borrow money there and then put it to work in higher risk markets. Now, what the gentleman is suggesting is that we're only about 50 to 60% done with this, and it is reflecting in the market. Not only did we get that bounce based on that earlier article that we shared, but it's already starting to come back down into ranges we saw recently, which means that the bounce was relatively weak and there actually might be contagion here. The yen 7.5% surge over the past week has pummeled carry traders. Investors who had borrowed yen were hit with margin calls as the currency jumped, meaning their bankers were insisting on more collateral. So if you've ever borrowed money, right, against an asset, the asset value goes down and all of a sudden your borrow rate was here, your asset value is here, and it continues to come down and then lower, your banker is going to call and ask for some of that collateral. These investors were forced to buy the yen to cover their previous positions, pushing the currency higher and triggering even more margin calls. And you can see how our economies are relatively correlated. These candlesticks represent the Nikkei, or the Japanese economy, and this purple line represents the S&P 500 index. Okay, over time you can see that we've both been trending up, with a few negatively correlated situations like right back here in June of this year, but generally speaking, if one is trending up, the other's trending up. Well, as of recently, right, the Nikkei has really been tanking, while from that all-time high over here, both of our markets have been relatively positively correlated, which would mean if one is dumping, the other is dumping. And as of recently, we've seen that contagion carry over into the markets, which really just speaks to how much our economies are intertwined now in a global market, where someone can go to Japan and borrow money and use it in the US and vice versa. This has led many investors to call for the Fed to make an emergency meeting, which simply means that the Fed would meet before their typical date and immediately cut interest rates as an emergency to save markets. Right here, you have some folks saying, I'm calling for a 75 basis point emergency cut in the Fed funds rate, with another 75 basis point cut indicated for the next month at September. And this was from Wharton's Jeremy Seigel. Now, before we dive into a potential rate cut and then the outcome in the market in terms of what would happen with your portfolio, I just want to share that you should probably head on over to bullrunners.com. And then once you opt in by simply giving your email address, you can discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. Here's a video of Nick from the channel sharing how that actually looks. And you can actually do it in 3 very simple steps. Okay, it's not that hard. And then what you would do is create an XRP wallet. And that would be step 1. You're going to send money into your XRP DeFi wallet. From there, right, you get the game pieces using that XRP. So you just go and get the game pieces, which is a very simple process, and the game itself takes about 5 to 10 minutes per day. So it's really not that hard, but it's a really cool way to earn crypto. And then finally, when you play the game, you earn the crypto, and then you can actually withdraw your crypto and sell it for XRP or vice versa. That choice is up to you, but go ahead and go to bullrunners.com to learn how to do that. Now, what are the odds that the Fed actually cuts interest rates in an emergency meeting? They do have one scheduled for September, but let's be real, September is a very long way away. And if the contagion continues to become worse and the US economy and markets continue to collapse, if we get a very negative jobs report or unemployment starts to tick up even worse, then the Fed might actually have to intervene. Now, the reality is this is very rare. The Fed rarely cuts rates between meetings, but there are 7 crises that have forced its hand. Now, in this article from the Wall Street Journal, they state that Monday's market rout increases both the risks of recession. The outlook would likely need to deteriorate further in the coming weeks to compel a bigger response, which means if the markets cool off and we don't see as much volatility and maybe they kind of just range for a bit with a bit of support, well, then there really wouldn't be a necessary response. Fed officials, however, don't meet again until September 17th to the 18th. They could debate debate there whether to kick off their widely anticipated sequence of rate cuts, and I would argue they are going to. And we'll look at the prediction markets here shortly, with a larger reduction of a half of a percentage point or even 50 basis points. But slashing policy rates before then, in between scheduled policy meetings, would be very unusual. But you know what? Markets have seen far more unusual things before, which is why many people and panicked investors are speculating that the Fed is going to cut rates between scheduled policy meetings. Matter of fact, even the San Francisco Fed President Mary Daly said this on Monday: "The Fed is prepared to do what the economy needs when we are clear with what that is, and there's many more pieces of information that could come out between now and when we next meet." So the reality is there's a very long time between the next scheduled meeting and when people are expecting a rate cut. So there is a high likelihood that we are going to get some sort of an emergency meeting, and if that does happen, that's going to send a signal to the markets that things are far worse than we expect. And at that moment in time, I do expect, with the amount of sell-off that we've seen so far, markets to become weaker and for there to be more of a dip. So why would that be bullish at all for your crypto portfolio? I'll explain here in a second, but first I just want to get into the poly market predictions market. So here are people betting, and this is actually a pretty accurate reading. You can come over to polymarket.com and you can check out the politics, the Olympics, crypto, pop culture, sports, business, science, you name it. Okay, here I have the Fed interest rates and when we are going to get a cut and at what rate in terms of the basis points. And right here, the majority of people, 54% of people with a $758,000 of betting, have agreed that we are going to get at least 50 basis points in terms of a rate cut. So you can see right here just how much markets have been tumbling since our recent high at 56.70. We are currently sitting at 51.86, and actually far more rapidly, with not only one gap down, but two gap downs 3 days in a row. Things are tanking. So this leaves the Fed in a very, very difficult position. The first and likely thing that's going to happen is they are sitting between making two things, or two decisions, I should say. The first decision is we lower interest rates slowly, let's say 25 basis points, but that will lend confidence to the markets. Many people will say, oh, look, they must not think things are just as bad as they are. So for that reason, maybe the markets will kind of chill out for a bit instead of dumping. The second thing is they might lower interest rates to 50, which is kind of expected. But then that would argue the case that things are probably worse than the Fed is seeing, or that people recognize. So the markets might sell off a little bit more. Whereas a 75 basis point rate cut, which would help the markets far more, and I would argue should be done, will likely send the markets into panic. So it really just comes down to, when do they want the markets to bottom? Do they want it to happen fast, or do they want it to happen slow? And I would argue slow. But the reality is markets have already been responding by dumping very, very fast here. And so now they are in a very difficult position. So I would assume they don't want to spook markets, but they can't respond too slowly. So they're probably going to do about a 50 basis point rate cut. And in that type of a situation, the markets are probably going to sell off a bit more. And if they don't cut rates even more fast, or have some sort of an emergency meeting, that will cause markets to tank. Now, again, you're sitting there like, what does this mean for my portfolio? That doesn't make sense. Why would I make money? Because if things continue to sell off at the rate that they have been, or things get worse economically, then there's two things that are likely going to happen. They're likely going to lower interest rates to near zero, or, right, they're going to lower interest rates in increments of like 50 to 75 basis points, but they're also going to do QE, or quantitative easing, out of everything. And the reality is, we've heard those words before. Everything is fine. Don't worry. Don't go and make a bank run. Don't withdraw your capital, right? We have the FDIC for a reason, yada, yada, yada. But usually when you start to hear those types of things from people that work at the central bank or any of the banks, that's an indicator that they're starting to worry. But in this situation, as you can see, it's looking eerily similar to our dumps right over here. And if we get an absolute crash like this, well, then it's very much possible as they practice QE or quantitative easing and print another trillion, 2 trillion, 6 trillion, whatever trillion, right? That we will start to have a V-shaped recovery. And as that money enters the market, we will hit a bottom very quickly. Now let's dive into some of the positive news for crypto, because all of that sounds very bearish, and I would argue it is pretty bearish, but the reality is I think it's short-term bearish while we should be very long-term bullish. So I've been consistently pointing at this indicator because I think it's so important to keep your eye on the target. The reality is Bitcoin is being removed from exchanges in mass, in major amounts, right? We're talking from the major highs over here at like 3 million Bitcoin in exchange reserves. We're currently sitting down at 2.68 million Bitcoin. And this is the lowest we've ever seen. In other words, even on the dumps right here, where we hit like 51,000 the other day, 49,000, and even 55,000 as of right now on the bounce, Bitcoin has not really been deposited on exchanges. And you'll see it kind of tick up like this a bit, but usually, right, these dips are used for buying. These institutional players, the BlackRocks of the world, are taking every single opportunity to buy Bitcoin at these current prices, and then they're withdrawing them from exchanges to hold over the long term, which is a very strong signal that they are looking at something like Bitcoin as a hedge against US markets. So although the price is currently tanking and it is considered a risk on asset, the way I would view this is they are planning and prepping into the next major economic downturn. They don't care about volatility right now. They don't care that the price dumps to $35,000. Every single dip should be used for buying, especially if the Fed is forced to lower interest rates to near zero and print trillions of dollars like they did in 2020. That would be an absolute fire sale wherever things land. Then there's another major bullish indicator. So yes, the markets might be a bit scary right now, but I would argue every dip is for buying right now. This could be a once in a lifetime buy the dip opportunity, and I truly do mean that. It now costs more to mine one Bitcoin using an average efficiency ASIC, which is a mining tool, and that's basically a computer, right? Than it does to purchase one Bitcoin on the spot market. Every time this has happened before turned out to be the start of a parabolic bull market, and here are the times it happened. Don't listen to the doomers. Sell your chairs, refi your house, have your young children pick up a part-time job. Would not recommend that. But you can see that these blue lines right here align perfectly when we started hitting this range right down here with this orange. So this is the price of Bitcoin, this black line. Okay, the orange line is the energy mass. And then here, right here, we have energy and gravity kilowatt per hour. So whenever we hit this lower range right here, you can see that we're very close to black bottoms right here on the price before a major parabolic move back in 2019, 2020, 2021, 2023, and now 2024. Then there is this extremely bullish chart called the Power Law Time Contours by APSK32 on Twitter. And this was recently published in 2024, but it does hold true today. So let's go ahead and play this out just to give you confidence in the future of crypto and the future of Bitcoin and XRP. Now, finally, let's dive into this indicator. We're going to be covering the MVRV ratio. It's an intraday rolling average, if you will, of 365 days on Bitcoin. Okay, now, but what exactly does this mean? Because we have this green line here. This is the price of Bitcoin, and then the red line is the MVRV ratio. Well, let me explain it real quick, okay? Basically, what it stands for is the market value to realized value. The MVRV ratio shows the ratio between the current price and the average price of every coin or token acquired. In other words, that we're talking people that bought on average over 2 years ago, the average price that they bought at, the average price that someone bought at a year ago, a month ago, a day ago, a week ago. On average, what is the price? Now, this is basically stating that an MVRV value of 100% or 2.0 means that if all the holders sell their coins or tokens at the current price, they will generate a 100% profit. So the higher this thing goes, the more people are in profit and the more inclined they might be to take those profits. But as we know, people are greedy, so that thing can go pretty high. Okay. On the other side of the spectrum, a negative MVRV value indicates that the asset is undervalued and that if people sold now, they would realize losses. So check this out. In all of history, and I'm really interested in this, check this out, right? Whenever we hit a new bull market all-time high, the MVRV ratio was insane. At one point hitting 154% in 2017. In 2021, we saw about, let's see here, an MVRV ratio of 100%. And then typically into those bull markets, as you can see right here, we never actually came back down to touch that basis, or not basis, but the midline, the zero line, if you will. Okay, only when the bull market was over did we start to break below here and then continue trending down. Now, in this bull market, right, and I can define this as a bull market because we started getting a series of higher highs and higher lows. We've consistently been in a bull market, and the MVRV is showing that right here. Well, for the first time in history, in a bull market environment, we are officially negative at -2 points, which simply means one of two things. It is either one of the most phenomenal buy opportunities before a new major all-time high, right? And a lot of people are in a loss now. Or this is the start of a bear market. But again, my theory stands that right now with the incumbents, Kamala Harris trying to run for president, I don't think that she is going to allow for a situation where Jerome Powell doesn't step in and support markets by practicing QE or lowering interest rates. So in that type of a cheap money environment, I do believe markets will be supported at least through election time, and then potentially pump further. All I know is either way, whenever we start to get back into these ranges, especially in a bull market, right, like right here and here was a great time to buy. Right here in July of 2020 and again in September of 2020, great time to buy before that next major move up. And in similar fashion, all the way from January of 2017 to the all-time blow-off top high of December of 2017, anytime we were low on the MVRV ratio and people weren't as profitable was a great dip buying opportunity. And in the case of XRP, it really was. We saw over a period of about a week, right, where the price jumped from 65 cents all the way down to 43 cents, and then this massive wick on a red candle. So this would indicate that as the price was dumping and collapsing, maybe due to a little bit of leverage and some short sellers, right, down to 43 cents, there were a lot of bids and buy orders in this range. Then the price pumped. Yes, we did sell off from 51 cents down to about 50 cents right now, but we don't have a current wick here on the current day, which means if we don't have a wick, right, there is a level of support here somewhere at the 48, 47 cent range. And that would make sense considering the VRVP is proving to us that we have a load of support there. And I'm sorry, this chart was freaking out on me, but right around here we have a crazy amount of support from the 46 to 48 cent range. So it makes sense there were a lot of buy orders below there. It makes sense that we were supported here. And in a situation or environment where we get cheap money and QE, I do believe that even if the market continues to tank, anything at 38 cents and potentially on some insane black swan event, 30 cents would be the buy of a lifetime, because at this point in time, it looks like Bitcoin is here to stay. It's looking stronger than other asset classes, even though it has been dumping. All of the technical stuff, and we're talking when we look at the on-chain analytics, is looking really good. So there might still be leverage. It might still be considered a risk-on asset, but I think these are some insane buy opportunities, and we've shown some charts and data to prove it. So in that type of a scenario and environment, if XRP also dumps to 38 cents or even potentially down to 30 cents somewhere in here, then I think those would be insane buy prices for the future. So one last time, if you haven't already, head on over to bullrunners.com to discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. This is our all market solution. Doesn't matter if it's a bear market, bull market, hop on over here, go through the training. It's 3 simple steps, and we'll show you exactly how to put your money to work so you can earn crypto. So thanks so much for watching this video. If you enjoyed it, smash the subscribe button, leave us a comment, a like, and I look forward to seeing you in the next video.